Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Wednesday, July 8th. Axios reports, and overnight, because he's in Turkey, I think it's over, Trump said when he asked about the ceasefire at the NATO summit. I don't want to deal with them anymore. They're scum. And then as far as I'm concerned, it's just a waste of time dealing with them. And he also suggested the U.S. could take out every single bridge in Iran. He had mentioned this, probably a month or so back, a little while before that, the ceasefire started. So that doesn't mean that this is very, very sort of belligerent, bellicose commentary, but it doesn't mean that President Trump won't do a 180 and announce a great deal in a few days. But like I said, we're going back to headline trading. You're watching Truth Social all the time just to see, what has come out. He should get back to the White House sometime tonight. Knowing him, he will be, he'll be tweeting, whenever you don't expect it. So, in some comments in NATO after the summit, so this is just really a string of comments, but I just highlight the ones that I thought were important. He said on Iran, a Q&A, not sure I want a deal. Let's finish the job. We're never going to see Iran have a nuclear weapon. He said that over and over again. It's the reason for the war, Trump's reason. And so we have an oil glut right now. Now, he said about NATO, there was tremendous unity in that room. He said nice things about Erdogan. Who was very angry and still is very angry at Spain, who said, who didn't want to use their bases to let the U.S. attack Iran, and they don't want to spend that much on defense. But then again, they are very far from Russia. This comment from German Chancellor Friedrich Merz is interesting. He's usually pretty upfront. Sometimes, he'll say, Trump was very friendly. Sometimes he's very angry at Trump. But he said, President Trump showed great attention and courtesy to all member states, well, I guess except Spain, and concluded the day by saying there was a feeling of love in the air. And that's that's pretty interesting from the Chancellor. That's some strength out of NATO. And then this was quite positive for Ukraine. I thought I'd mention it. He said he told President Zelensky that the U.S. would give Ukraine a license to manufacture Patriot air defense missiles, which of course, they need. Now, it's probably not that easy to manufacture Patriots, but the fact that he's allowing them to do it would be a big step. He also said that Ukraine would need a security guarantee after war, and he did not see Russia attacking Ukraine again once the conflict ended. Perhaps, but Ukraine getting a security guarantee, obviously he didn't say it was from the U.S., would be a big deal and, would be quite positive for Europe. So we'll look at Brent. Well, Brent is up 10% in 2 days. We've looked at this chart for a while, pre-war. Now we're back up to this region. Now it's not, certainly 10% in 2 days is a lot. We were bottoming here a little bit, and I suspect we're going to consolidate or even get a little rally. Now this is, of course, trying to price in, more attacks between the Iran and the U.S. Iran had sent missiles or drones against some of our Gulf allies already. Does not appear to have done any damage, so we'll have to see how this plays out. I suspect that, if we get a cessation of hostilities, there's a great deal, then, oil will start to drift back lower. But right now, I think we're going to be in this sort of green range. I think that's a reasonable place to be, for the next few days based on where we are right now. Gasoline and heating oil up sharply. Gasoline is up 6%. Diesel, heating oil up 11%. And obviously, diesel for the transport trucks. Gasoline, has hit a bottom. Even it looked like it was bottoming even, without this, new hostilities, but certainly we expect to see it go higher. And as we see here, this is the first uptick from yesterday. It's up, 0.6 of a penny for the first time since, since late May. So I think we will continue to see this. May edge up towards $4. Obviously the administration would love to get it back down below 350, where it was, below 350, it was just over 315 a year ago. Quick look at Korea. Korea was down 5.5%. I think there's still concern about overvaluation in that space now. But also, I would say the Iranian attacks on shipping and our retaliation and potentially putting on a blockade and pulling back the waivers on their ability to sell oil doesn't help the Kospi here. So, I think it is, well, let's see how we finish up the week here. If we get, some kind of consolidation over the next 2 days. So, SpaceX went public last month, and now Bloomberg's reporting that Blue Origin, Bezos' space company, is looking to raise about $10 billion at a valuation of $130 billion. One big institutional fund is leading around investing $4 billion. So far, Blue Origin has been completely funded by Jeff Bezos, and he's done it by primarily selling some of his Amazon.com stock. But I mean, it's expensive. It's a lot of money. They had a big failure in May when their New Glenn rocket had a tremendous explosion on the pad, and it shows that going into space isn't easy. Now, the other thing that's interesting is, like Elon and like his his basically idea about AI in space and his phone network. Bezos, Blue Origin announced TerraWave, a communication network in low Earth orbit with more than 5,400 satellites, with a first launch expected late next year. And that's a little bit in the future, and it'll probably take them some years to really build that up. But a big piece of the valuation of SpaceX is actually those networks, those AI networks, but potentially in space. So it's a modest raise, just $10 billion. Remember, it was $86 billion for SpaceX. People will want a piece of this. It's going to be less exciting in SpaceX, but you want to, Bezos is probably not going to abandon this. This is, there's basically, one player right now, and he's hoping to be a second player in terms of private launching. And it wouldn't hurt to have a small piece of this. I think he'll do okay. Barron's has a couple of really interesting articles, and something that I might go more in depth in a weekly. But today they said the AI stock rally isn't over; it's just moved to China. Online retailer Alibaba rose 12%, leading a Chinese tech rally on Wednesday, even as investors carry on selling U.S. and South Korean memory chip makers. So it's a little rotation, and their suggestion is maybe this is a new toy for speculators. Alibaba did well, e-commerce platform JD.com did well, and so did Baidu. And Baidu is also working on their own AI. And so they're suggesting that this tech rally could be a sign that investors who might be, out of Korea or moving out of the U.S. could put some money towards, the developers of large language models, sort of a rotation, out of Korea into China. And they argue Monday, and we'll look at that article in a second, that Chinese AI companies are well positioned to disrupt the industry, given how cheap their chatbots are. Alibaba has sought to position its Qwen large language model as a ChatGPT rival. Stock hasn't done really well because they've been spending so much money. It's a little bit like Facebook or Meta. But this rally could be a sign that the stock is about to turn a corner. Let's take a look. Alibaba stock, been kind of on a downtrend, all year, and a steeper downtrend recently. But this is a big bounce. Now, can we sustain this bounce? I mean, you're gonna have a little bit of time to break this downtrend, and so you need some consolidation here. The PE at 15 isn't bad. I mean, it's not as good as, I'll tell you, it's, SK and Samsung, but different businesses, right? Obviously, they're in the models and versus a chip maker, but PE around 15. I mean, if we want to park a little money in there because we've just sold some of the Korean names or the US names, this may not be a terrible place. So I went back and looked at Barron's article from Monday, and their point is, AI is the rage. People want to use AI for more productivity, but it is expensive. I mean, listen, I pay for Claude, and I'll do some stuff on it, do some research, and there's actually a place where you can look at your usage, and your usage actually builds up pretty quickly. And I'm on a basic paid model. I'm not on an enterprise model, but you could see how expensive it could get. And the Chinese models are very good at being much cheaper than the US models. They mentioned, of course, DeepSeek early last year when it scared the AI market. DeepSeek is still 3% at the price per token of OpenAI's 5.5. Now, that doesn't mean it's 3% of the price. It's per token. How many tokens they use per calculation is a little bit of a different story. But nevertheless, a tiny fraction of what ChatGPT is. Now, the most highly regarded Chinese model is called GLM from a company called Zhipu. And and it's a pretty good model. It comes in 5th behind 3 models from Anthropic and 1 from OpenAI and ahead of Google's Gemini model. So apparently, if a U.S. organization uses Zhipu that's hosted in China, the cost per token would be 15% of OpenAI. Now, this is obviously a problem because no American enterprise is going to put proprietary information, into a Chinese cloud or in a Chinese server. That's sort of like giving it away, a gift with a ribbon on top. So that's not going to happen. Zhipu and some of the other ones have been heavily subsidized by local Chinese governments and state-owned enterprises, which is why they've been able to advance so quickly and they have low prices. So, but the Chinese, if there's one thing China is great at, they will drive prices to the absolute bottom. So just going on, because this really was an interesting article, so I'm spending a little time on it. GLM is an open weight model, which means if you have the capacity and you have enough computers, you can actually download their core intelligence, their weights, and use it yourself, or you could use it through Amazon Web Services, Azure, or Google Cloud, and they offer GLM at a massive discount to the top models from U.S. companies. So you basically have to pay for AWS or Microsoft or Google to use it, but you don't have to pay Zhipu. And the reason Zhipu does that is they get a lot of data back in terms of how well it's performing, and it's basically trying to acquire customers. You get loyal customers, and then you can build out future things, and maybe you can charge for things then. Concerned that, does this mean that we've overinvested in data centers? I think we're a little early for that. The other thing that's interesting is, if prices are much lower, it doesn't mean that everybody, goes out of business. You could increase a lot of demand. There are certain things that, I might even use AI for to organize my mailbox that I'm not going to use right now because it costs too much. It will use up all my tokens. The best analogy to this is right here. It goes, when textile mills took over looms, they made clothing much cheaper. But because clothing was so much cheaper, people didn't have to own 1 or 2 shirts. They could own 12 or 14. So actually, it boosted overall demand because it was so much cheaper. So cheaper AI, Barron's argues, could increase demand for them, not lessen it. Now, of course, if you're a model maker and you're charging for the model, that might be tough. Like Google, their cloud would benefit from hosting these things, but Gemini would lose its pricing power. So interesting to keep an eye on. So Zhipu, you can see it on the Hong Kong exchange. Only started really the beginning of the year. It's gone up a lot. We've seen a lot of volatility here. It's a very impressive looking chart, but I want to do a little bit more investigation in it. I do believe they haven't made money yet, but that's not a big problem in tech and couldn't sustain itself for a long time if they have the funding. Baidu, big oscillations. Once again, they are an AI name potentially as well. So how is the U.S. doing? S&P 500, no panic here, down a little bit. In some ways, I think it's discounting Trump. The breadth, the 9 out of the 11 sectors are lower, but technology is hanging in, and of course, energy is higher. So we're just down a little bit here, down about 1/3% in the S&P 500 late in the day. We have oil and products are up a lot, but are well off highs. You can see a high of 76 for WTI. It's only trading at under 74 now. And then Brent is 78 after being at 80.5. So I think they're discounting Trump a little bit. Stocks are lower, but no panic. Bonds are lower here on concerns about inflation. Interestingly, the dollar is a little bit lower. Metals and crypto are lower. And then finally, we looked at the crude stocks. We have a nice build. The consensus was to draw 2.5 million. We have a 3 million bill, a gasoline draw right on consensus, and then a pretty big heavy draw in distillates, about 5 million barrels versus the small build. Sorry, the last thing is the Fed minutes. No real surprises. They basically said that The upside risks to price stability remain elevated, but downside risks to achieving maximum employment had moderated a bit. So they're less worried about employment and still watching inflation. Obviously, this is from a couple of weeks ago. They said that if there's moderating inflation, they could maintain or eventually lower the target range for Fed funds rates. But in another scenario, if inflation remains elevated due to strong AI-driven demand, higher energy prices and tariffs, most said some policy firming would likely be warranted. So basically, if you read that, my take is they're just watching the World Cup, and that's the right thing to do right now. So thanks for joining me, and I'll see you again tomorrow.